engines of our economy and a reflection of our nation's macroeconomic realities. Welcome to New Week, and today, Monday, July 6, 2020, we bring you updates, reports, analysis on the markets. Here's what we have lined up for you. The Codros wrap-up and projection for the new week. ProShare June 2020 Nigeria Capital Market Service Report. Boa Cement's proposed 50 megawatt plant in Adamawa State. ProShare economics analysis on the capital market. But let's begin with the equities market and activities there from Codros that published their analysis on ProShare, Nigeria's leading financial information hub. It says extensively that Nigerian stocks suffered under a week of losses on rising COVID-19 cases in the country and the persisting FX liquidity in the markets. The ASI declined by 2.0% week on week, led by sell-offs in Boa Cement, minus 2.3% performance, MTN minus 1.3% performance, and Unilever minus 18.8% performance, and the banking stocks. Accordingly, the month-to-date and year-to-date losses printed are minus 0.6% and minus 9.3% respectively. Sectoral performances were negative, with the banking minus 7.5%, industrial goods minus 6.4%, insurance minus 2.2%, oil and gas minus 1.2%, and consumer goods minus 0.5%. Indices on the recording week showed losses. Codros, in his opinion, says that the risk on the horizon is due, and this is due to a combination of increasing number of COVID-19 cases in Nigeria and weak economic conditions. Thus, it continues to advise investors to trade cautiously and seek trading opportunities in only fundamentally justified stocks. Exactly what I've been saying here, that we should trade cautiously and look at fundamentally justified stocks. Let's move on to the fixed income and money markets. What's really happening in the fixed income and money markets from the analysis from Codros. The overnight rates jumped by 740 basis points week on week to 23.5% as outflows from the CRR and OMO auction, that's 100 billion naira debits, outweighed the inflows from OMO maturities, 333.31 billion naira, and retail FX refunds. From the analysis, in this coming week, they expect a modest contraction in the overnight rates, with system liquidity receiving a slight boost from the OMO maturities of about 16 billion naira. Looking at the treasury bills, in treasury bills secondary market, trading remained at moderate levels following pressured system liquidity, low rates, and shift in focus to the primary markets of both segments. Nonetheless, the average yields across all instruments pared by 2 basis points to 4.2%. Across the segments, average yield expanded by 14 basis points to 5.2% at the OMO segment as activities in the space remained frail. Yields contracted by 15 basis points to 2.1% on average at the NTB segment as market participants covered for lost bids at the primary auction. At the PMA, demand remained heavy as there was an oversubscription of 3.7 times for the 88.86 billion naira worth of bills on offer. The auction closed with the Central Bank of Nigeria rolling over 10 billion naira of the 91-day, 20 billion naira of the 182-day, and 58.6 billion naira of the 364-day at respective stop rates of 1.79%, previously 1.80%, 1.91%, previously 2.04%, and 3.39%, previously 3.75% at the OMO auction stop rates. Were unchanged as the Central Bank of Nigeria mopped up 100 billion naira of maturity bills across all tenors. For Treasury bills, Codros expects that demand for T-bills will remain at current levels amidst tight system liquidity and low yields. Let's go to the bond market space. Trading the Treasury bonds secondary market ended the week on a bullish note due to particular interest in instruments at the head and belly of the curve. This is as investors looked to invest OMO maturities and lost bids at the NTB auction. Thus, average yields across instruments contracted by 69 basis points to 8.1%. Across the curve, yields contracted at the short minus 69 basis points, mid minus 128 basis points, and long minus 30 basis points segments, following demand for January 2026, 133 basis points, July 2030, 203 basis points, and July 2034, 553 basis points bonds respectively. Codros expects the Treasury bonds secondary market to remain bullish due to relatively attractive yields in the space. Let's go to the foreign exchange, very important segment. This is the 5th straight week, and the Central Bank of Nigeria foreign reserves declined as FX outflows outpaced inflows. Specifically, the foreign reserves dipped by $52 billion, $10 million week on week to $36.16 billion. Consequently, the Naira strengthened against the US dollar by 0.09% week to date to 286 Naira to a dollar at the import and export window, while it weakened by 0.22% to 461 Naira to a dollar at the parallel markets. In the forwards market, the Naira appreciated against the US dollar across all contracts. Pointedly, the 1 month as plus 0.2% to 287 Naira 31 cents to a dollar, 3 months plus 0.3% to 390.33 Naira to a dollar. That's 6 months plus 0.5%. And also 394.66 Naira to a dollar, and then 1 year plus 0.8% to 410 Naira 56 to a dollar. The contracts all gained ground against the US dollar in the review period. Elsewhere, the Central Bank of Nigeria increased the bid price for FX at the secondary market intervention sales window by 5.6% to 280 Naira to a dollar. This, according to Codros, regards in line with the Apex Bank's intention to unify the exchange rate towards the NAFEX rate. For Codros, the widening current account position suggests that odds are stacked against the Naira. Beyond that, as the economy gradually reopens, the resumption of FX sales to BDC segment of the market will place an additional layer of pressure on the reserves as the CBN funds the backlog of unmet foreign exchange demand. The FX market remains very critical in this period. And that's from the FX market. And let's go to our ProShare research as we rolled and published the June 2020 Nigeria Capital Market Service report. This market report is for our market stakeholders to get an insight into what happened in the market and how it shaped the market activities. The Nigerian stock market closed in the month of June in red as market witnessed renewed sell pressures during the month under review. The Nigeria Stock Exchange All-Share Index dipped by minus 3.12% as against plus 9.76% gain recorded in the month of May 2020, while the NSD Unlisted Share Index closed northwards with plus 3.48% gain recorded at the end of the month under review, as against minus 1.32% loss in May 2020. Year to date, the Nigeria Stock Exchange All-Share Index has dipped by minus 8.80%, while the NSD USI inched up by plus 2.58% so far in the year. Furthermore, the NSE ASI ended second quarter 2020 in the positive territory with plus 14.92% gain recorded as against minus 3.46% loss in second quarter 2019, while the NSE USI also closed the quarter northwards with plus 3.29% gain recorded as against minus 1.51% loss in second quarter 2019. On market development, regulation, and investor protection, the Securities and Exchange Commission, sequel to its publication of new rules relating to collective investment schemes in December 2019, the Commission further issued some clarifications to facilitate effective compliance with its collective investment schemes during the period. Also, the Securities and Exchange Commission looked at the capital market. The Nigeria Stock Exchange joined suit in announcing the results of the first half of the year market index review. This led to entry and exit of some companies from some indices, which will take effect when the market, of course, reopened since July 1st, Wednesday, 2020. Looking at the half-year 2020 market review, the first half of the year review was done in the Capital Market Service report for June 20, focused on the following areas: market performance in first half of the year, gainers and losers in the first half of the year, global markets, and the African markets. In terms of market performance, a review of the NSE sector indices performance in first half of the year revealed that the Nigeria Stock Exchange Insurance, Industrial, and alternative securities market indices all closed green. That means Accordingly, plus 3.10%, plus 2.63%, and plus 0.96% gains, while the Nigeria Stock Exchange Consumer Good and CG Corporate Governance Indices recorded minus 22.26% return to top in the red. Gainers and losers in the first half of the year 2020 on Nigeria Stock Exchange. The markets, in terms of review of the first half of the year 2020 performance, recorded 34 gainers to 79 losers. Namath and Loan Union topped the list of gainers with plus 166.13% and plus 106% returns, while International Breweries and NCR topped the losers chart with minus 56.84% and minus 55.56% returns respectively. The global market showed that the Nasdaq represented the only market to have closed the first half of the year in green, that's plus 12.11% return, while other markets closed in the red. The African markets within the African market space, the Zimbabwe All-Share Index recorded plus 670.45% return in first half of the year to top the chart and closely followed by plus 171.53% return by the Egypt EGX 70, while the Mauritius SEM 7 index dipped by minus 26.99% to top the markets with negative returns in first half of the year. The Austrian ATX and the Spanish Madrid General both recorded minus 29.50% and minus 24.85% loss respectively to top the markets in red. The FMB Securities Exchange continued to dominate the market capitalization with a total cap of 28.82 trillion naira, followed by the Nigerian Stock Exchange with a market cap of 27.46 trillion naira, and the NSE/OTC with a market cap of 525.4 billion naira in terms of capitalization. In terms of percentage share of the overall capital market ecosystem, FMDQ leads with 51%, with NSE coming second with 48%, and the NSD third with 1%. In terms of the funds and investment products in the markets, from June 9, 2020, fund data, the latest one available on the mutual funds, showed that the Stanbic IBTC Money Market Fund currently has the highest net asset value of 332.40 billion naira, closely followed by the FDN Money Market Fund and Stanbic IBTC Dollar Fund. In terms of net asset value and unit price, Vetiva Griffin 30 ETF, this ETF product was listed in March 2014, is an open-ended exchange-traded fund managed by Vetiva Fund Managers, designed to track the performance of the constituent companies of the NSE 30 index and to replicate the price and yield performance of the index. Stanbic IBTC ETF 30, limited on Tuesday 30th December 2014, was listed and 11,447,000,000 units of the Stanbic IBTC Exchange-Traded Fund 30 for trading on the Nigeria Stock Exchange. The new listing represented, at that time, the last to be recorded in 2014. Also, the Lotus Halal Equity Fund, ETF, 62 million units of Lotus ETF, an exchange-traded fund, were admitted to trade on the exchange still in 2014. And in October 2015, Vetiva Fund Managers Limited listed 3 new ETFs, and those ones include Vetiva Banking Exchange Traded Fund, Vetiva Consumer Goods Exchange Traded Fund, and Vetiva Industrial Exchange Traded Fund. The ETF redeemed a total of 5 million units of securities surrendered by unit holders on the 16th of July 2014. By this action, the total units of ETF now stood at 149,400,000. Recently, it also declared an interim distribution of 12 kobo per unit to all unit holders whose names are in the register of members at the close of business on period of Monday, 10th August 2015, showing the evolution of ETFs in the Nigerian markets. Now let's look at the listings. So far in 2020, the following companies have been delisted in the markets. AG Leventis PLC, January 7, 2020. Continental Reinsurance PLC, January 17, 2020. So far, the following companies have been listed in 2020. Bois Cement PLC, January 9, 2020. And in June 2020, we had no listing at the moment. Hopefully, we'll see activities happening in the market in second half of the year. Now, for initial public offer, Airtel Africa PLC is raising approximately $750 million from global IPO, including proceeds for Nigerian offer, and this offer is 14% and 18.9% of the issued additional share capital depending on the offer price. The announcement of the offer price and size. The publication of this statement was done as at June 28, 2019. SACO PLC offer that was providing about 406 million units of shares at 4 naira 65 kobo each. The offer opened as at November 20 and closed in December 2018. Those were the kind of activities we had. Also, in terms of hybrid offer, Unity Bank PLC is still the only firm that has done hybrid offer in the Nigerian capital market as at 2014, with rights issue of about 38 billion ordinary shares of 50 kobo each at 0 naira 50 kobo per share, and special placing of 40 billion ordinary shares each at 0 naira 50 kobo per share. In terms of the right issue so far in 2020, the following companies have indicated plans to engage the market via rights issues: Consolidated Hallmark Insurance PLC, USC Property Development Company, eTransact PLC, Prestige Assurance, ICO Insurance PLC, Transcorp Hotels PLC. In terms of memorandum of listings, to a total of 6,111,000 units at $1 per unit of legacy American US dollars bond funds were listed as memorandum listings at the exchange as at the period of April 23, 2018. Looking at merger and acquisitions so far that has impacted the market, on June 1st, 2020, the board of directors of the ABN Holdings PLC and Sanlam Emerging Markets Proprietary Limited officially announced the completion of the sale and transfer of FBN Holdings' 65% shareholding in FBN Insurance Limited to Sanlam Emerging Markets. This effectively confers full ownership of FBN Insurance Life and subsidiary FBN General Insurance Limited on Sanlam forthwith, following receipt of all regulatory approvals. In January 2020, CCNN was delisted and Boa Cement was listed, and this is an offshoot of the merger process that started since October 2019. In October 2019, for those that remember, CCNN and Obu Cement Company notified that they are both exploring a merger of both entities. The requisite pre-merger approvals had been obtained from the Federal Competition and Consumer Protection Commission, SCCPC, and the Securities and Exchange Commission, while a no objection to the proposal had been obtained from the Nigeria Stock Exchange. Furthermore, the order from the Federal High Court to convene the separate court-ordered meetings of CCNN and Obu Cement had been obtained. Let's look at market compliance. And in terms of market compliance, giving you a review, and in terms of retrospect of the first quarter 2019 results period ended, 224 firms. Take note, 124 firms, about 89% of the market, filed their results in the first quarter of 2019, while 11% defaulted. Second quarter of 2019 results showed that at the period ending June 30th, 2019, 130 firms, 89% of the firms, filed their Q2 results, while 11% did not file their reports. For Q3 2019 results, 131 firms, that's 91% of the firms, filed their Q3 results, while 9% defaulted. While in the fourth quarter of 2019, period ending the 31st December of 2019, 108 firms, about 91%, filed their fourth quarter results, while 9% defaulted. In the first quarter of 2020, period ended, 95 firms, 68% of the total firms, filed their first quarter results, while 32% defaulted. Market is about innovations, and let's look at some innovations and developments in the market. A quick run through of innovations in the market as at the end of May 2020 showed that the brokers community continued to witness and record innovations in stock trading, while innovative updates from SEC and NSE also improved slightly as against previously stated editions data. SEC issued guidelines for facilitating effective compliance with SEC Rules 57 and 58 on net capital. SEC also issued exposures of its proposed crowdfunding rules. SEC brought out clarifications on the provision of gifts at general meetings of companies. SEC also notified on activities of unlawful market operators who are using every means to swindle Nigerians of their investments. SEC issued circulars to all capital market operators and stakeholders on post-approved amendments. SEC Nigeria also issued advisory on COVID-19. SEC issued circulars to all CMOs and stakeholders on post-approval emissions. SEC proposed new rules on collective investment schemes and sundry amendments for exposure. Let's look at the Nigeria Stock Exchange. A lot of things happened. The Nigeria Stock Exchange CEO reviewed 2019 market performance and gave outlook for 2020. The Nigerian Stock Exchange published Security Lending Report for January 10th. Nigerian Stock Exchange launched the long-awaited Growth Board, which has been described as a game changer in the equities market. Nigerian Stock Exchange gave members assent to the mutualization resolutions at the court-ordered meeting of the EGM, extraordinary general meeting of the NSC. That, again, is another game changer. The federal government of Nigeria 14-day restriction, NSC, to sustain the remote trading amidst the COVID-19 pandemic, and we can see the effects. NSC also activated a 30-day remote working plan, which meant that wherever staff were and operators, they were able to carry out trading. Remote trading also was extended, and the time for filing audited financial statements for listed companies was also extended for the period of the quarter. NSC also advised companies to put adequate precautionary measures in place ahead of the 2020 annual general meetings, which we were able to see that there's been success in terms of conducting those meetings. And NSC also brought out its proposed amendments to its listing requirements. Those were interesting activities to just show that despite the pandemic, the market was recording very, very interesting activities, and that's just a snapshot of the activities in the interesting market. Now let's take you to one of the interesting stories we have in the market today about Bua Cement. Bua Cement is one of the big players in the cement industry in Nigeria and a listed company in the Nigeria Stock Exchange. So, of course, what is happening in Bua should be of interest to you. Bua Cement is set to establish an ultra-modern 3 million cement plant in terms of 3 million metric tons capacity. The plant has a 50 megawatt power plant already designed for it, and it's going to be located in Guyuk and Lamode local governments of Adamawa states in the northeast region of Nigeria. Some good news for the northeastern state of Adamawa. This was revealed when the chairman of Bua Group, Abdul Samad Rabiu, led the Bua Cement management team on a courtesy call to the Adamawa State Governor, Amadu Umaru Fintiri, in Government House, Yola. This is a very interesting development, like I said, and speaking during the visit, Abdul Samad Rabiu said, preliminary findings show that the two local governments of Guyuk and Lamode are reputed to have quality of limestone deposits, and Bua Cement is ready to begin the investment in the state. He added that Bua will use new technologies to supply power to the proposed cement plants and communities of Guyuk and Lamode, in addition to providing 3,000 direct and 5,000 indirect jobs. The chairman stressed that the Guyuk cement plant will be the major investment in Northeast by Bua and solicited for support of Governor Umaru Fintiri to set up the factory in Guyuk. Rabiu said the company made a decision to source its raw materials locally, and it has invested billions of dollars in various sectors across Nigeria, and therefore urged the state government to support Bua to actualize the Guyuk cement project. In addition, he praised the commitment of the governor within 1 year in office in many sectors of development despite economic challenges in Adamawa State. Responding, Governor Amadu Funtiri said his administration efforts in exploring local content has started yielding results and thanked Bua for showing interest in establishing the cement plant in Guyuk. He further assured the management team of Bua that government will make whatever is needed and provided the necessary support, which will create an enabling environment so that the Bua Cement Company in Guyuk will become a reality. He also expressed readiness of the government to protect the investments once it is established, and told them that his administration will maintain the good relationship with the company for the benefit of the state. Bua is Nigeria's second largest cement producer by volume, with cement plants in Sokoto and Edo states. The company's newest plant in Sokoto is expected to be operational in 2021. When completed, the Guyuk cement plant will bring Bua's total capacity to 14 million metric tons per annum. Just to take a brief note on Bua, for those of us that remember, ProShare research we wrote about the cement industry, and we said that Bua is going to leverage more in the northern market. And you've seen now from the northwest in Sokoto, they're leveraging on the northeast. Also, in this period, we told you and we brought you the analysis from the Economic Sustainability Plan that the federal government will be encouraging industries and companies to deepen domestic production and use our local resources. And that is what Bua has positioned itself to. It is using the limestone deposits in Guyuk and Lamode. Also interesting fact for Adamawa State is that from our Approach Economics report, we talked about Adamawa and said Adamawa must leverage its solid minerals potentials. It must also look at agriculture and look at new ways of IGR. And interesting to note that now Governor Fintiria and his team have an opportunity to really expand the IGR, because once that plant comes on board, that's a huge opportunity to deepen the IGR and reduce dependence on the federal account allocation. So that's interesting news for Adamawa State, and we hope to see more investments happen this period. So amidst the pandemic, it's not all gloom. Companies are making investments, and we'd like to see more of that happen, because when companies make investment that are quoted in the market, it creates more value, it creates more activity, and we're monitoring the activities around Boa Cement and its price in the course of the week. Now, let's continue with some insights into the activities in the market from Approach Economics analysis on the market. Let's look at the Nigeria fixed income market. This has been one market that has been followed since the pandemic because of the whole issues around yields and low yield environments. As the virus continues to spread in Nigeria, yields of the 10-year government bond are declining. That's the story. It's declining. This indicates that there has been a rise in demand for bonds, which has pushed the yields down, as the price of bonds and the yields are inversely related. Note, the price of bonds and yields are inversely related. Due to the impact of the coronavirus, the Nigerian government has resorted to borrowing domestically. Don't forget, they said we're going to borrow about 850 billion naira from the domestic market instead of seeking external funds. This means that there will be likely an increase in the yields of the bonds with the new plan of the government to borrow domestically. However, because of the inverse relationship between the price and yields, the yields will likely decline if there is an increase in the demand of the bond, which will happen most likely. Data from the Debt Management Office released in May 2020 revealed there was an oversubscription of the government bonds by over 300% in the 5-year, 15-year, and 30-year bonds. Let's look at the Nigeria stock market as at 29th of May 2020. The year-to-date sectoral performance of the Nigeria Stock Exchange showed that majority of the sectors recorded a decline in their performance. The food and beverage sector recorded the highest dip of minus 28.3%, food and beverage sector, while the NSE Industrial Index recorded the highest gain in the year-to-date performance of plus 12%. Just shows you the whole insight for those of our investors that want to take some decisions this period. Food and beverage going through that challenge period, the industries are performing well. In March, April, when major economies were hit by the coronavirus pandemic, NSE, the Nigeria Stock Exchange, had a positive performance. This was on the back of the cash inflows from foreign portfolio investors and an increase in global and local financial liquidity. In terms of sector performance, as at the period under review, May 29, 2020, here are some key updates. For the NSE 30 index, the year-to-date performance is currently minus 6.9%. NSE 30 index, minus 6.9%. Food and beverage, like we said earlier, is minus 28.3%. The banking index, the banks play a dominant role in the markets, is minus 14.8% year-to-date performance. Insurance. Don't forget that insurance is going through a capitalization phase. Insurance had a positive of 4.76% as at May 29, 2020. The oil and gas year-to-date performance as at May 29, 2020 was minus 13%. And the NSE Industrial Index, like I said, year-to-date performance is 12%. Very imposing, very convincing, and shows where investors would like to go. The NSE Alternative Securities Market is interestingly showing some signs of activities with 3.74% positives. But the NSE Pension year-to-date performance is minus 3.1%. That is something of very huge interest. The pension remains one area that needs a lot of reforms and unlock opportunities for people to always look at how they can create value and make more in terms of revenues and a sustained market. Don't forget that the pension has experienced reforms since 2004 and is currently talking about over 10 trillion. As I've been discussing on how we can tap into our pension funds to finance infrastructure and also carry out some other activities. It's still being discussed because they have to. The pension operators, the PENOP, have said that they will only invest in what is effectively regulated and has a clear specific target of returns, because you know that pensions are very, very fragile. They are very important and must be invested properly. That is very important, and talking about important things, just to inform you that this June 2020 Nigeria Capital Market Service report that we talked about from ProShare is a very, very interesting report. It's a snapshot and aid memoir of developments in our markets, tracking milestones that the investing public should be aware of. I advise all our viewers and all investors watching this program, please feel free to share your opinions and observations and feedbacks with us through research@proshareng.com. Please take note, research@proshareng.com. That is where you can send your feedback, because in this report we capture activities in the market from compliance to innovation. We give you all the capitalizations in terms of how each of the key exchanges close the month and give you a percentage. And in a subsequent edition, we'll give you a review from January to July of how each exchange has dominated or played in terms of capitalization. And this is what we give you, rich insight from our ProShare research. And don't forget, as I keep saying, that ProShare is Nigeria's leading financial information hub. The market promises to be interesting this week. A lot of stories that we'll bring to you, a lot of things to watch out for, and of course, you don't want to miss every moment of our 10 a.m. market review. What you need to do is join our website, www.proshareng.com, and to get all those updates, read our news reports and analysis, and you will not miss anything. I hope to see you tomorrow as we continue to discuss the financial and capital market. Don't forget, as I said, everything about an economy is vital and it kickstarts from the capital market. The capital market gives you an insight of the impact of policies. That is why we cannot stop discussing about financial and capital market. To come your way again, thank you for watching. Have a nice day and stay safe.